Hello there and welcome to the weekly outlook. Okay, so we're going to be concentrating on one trade really this week, and that is the RBA cash rate decision and rate statement, which is due out on Tuesday morning. That's going to be the main sort of focus this week, and that's my risk event weekly outlook video that I'll be doing this week is based around that Aussie dollar trade. Now we know that we had a fairly strong um, reading from the GDP for the US last week, which has given a little bit of strength to the US dollar. Now, at the moment, the Australian dollar has been supported by the recovery in commodities, oil price being supported by the OPEC decision to cap production. But reading more deeply into that, we can see that they have actually capped production at all-time highs. Anyway, it's kind of like calling a ceasefire in a war when everybody's run out of bullets. It's a little bit obsolete, really, and there's a lot of talk about whether OPEC are going to actually be able to implement the cap in production as well. So, that oil rally could be short-lived. Don't think it will continue to last certainly past $50 to the barrel anyway. So I think we could see that capped and start to trickle back down again. The risk there has been a good risk on tone in the market as well, which supported the Aussie dollar on Friday. We had a bit of a turnaround in the risk on tone. However, we've still got some things that are going on, such as the Deutsche Bank situation, which could change sentiment very quickly, and the Australian dollar doesn't do very well in a risk-off environment. It does tend to sell off. So we've got those sort of things to bear in mind. But at the moment, the US dollar is certainly stronger than the Aussie, and now we've got the RBA rate statement on Tuesday, where now on the calendar it doesn't show that they're expecting to cut rates, but when you look at the data, look into the sort of figures for Australia, we're not doing too. The country's not doing too well in terms of the economy. Their GDP growth rate dropped from 1 to 0.5, although unemployment did tick down to 5.6%. Inflation rate has dropped from 1.3 to 1%. The interest rate is still fairly high. It still holds a fairly good yield. Australian dollar at 1.5%, which is why in a risk-on tone in the market, we do see the Aussie dollar being bought up because it does have a high yield. However, with the underperformance in inflation, the RBA's target is between 2 and 3%. So they have to try and spur the economy to get there, and with quite a high interest rate, I would say that they are likely to cut interest rates at some point this year. It may not necessarily be this meeting, but they certainly, I think, will give forward guidance that another rate cut is on the cards. So, I I would say, I mean, we may possibly get a rate cut on this occasion. I wouldn't be too surprised if they did. I'm just having a look at see if I can see if there is another meeting, in fact, after this one. We have on the 25th of October. Let's just having a quick look down there. We've got retail sales out on the same week as well, so that's always a bit of a driver for the markets. Now the 25th, we've got some data out on Australian dollar of October as well. We've got the the 26th, we've got CPI quarter on quarter. So obviously that's inflation data, which is going to be of interest to us as well. So and also what I'm looking at on the other side of this as well is we've got the non-farm payrolls, which are expected to come in slightly better for the US on Friday. So what I'm hoping is we get a kind of a negative drive on the Aussie dollar, which starts it to sell off, and then we get the non-farm payrolls coming in on Friday, which I'm hoping will add pressure to this trade as well. The next cash rate decision is the 1st of November for Australia. So again, if they don't cut this one, they may possibly give the inclination that they're going to cut in November, which should add pressure to this as well. Now, the best selling price really on this was the 7.7 level, but we have rejected that, and it has pulled back to this 7.650 level, which is turning out to be quite a significant area of resistance. So I'm actually looking to sell on market on this on Monday morning, or as soon as the market opens on Sunday night. Obviously, taking the trade on Sunday night, be careful of the spread. It can be quite a bit larger if you're trading it out of normal market hours. But we have got a bit of a head and shoulders pattern developing, I'm hoping here. So we should see this being the second shoulder, and then a sell-off and a breakout of the 7.6 would confirm, and then that would confirm, I would suspect, a drop down to 7.5 at least. But hopefully, with another rate cut, and with if the non-farm employment change starts to pick up, then we can look at a much bigger picture on Australian dollar, and we can certainly look at trading it back down once it breaks this trend line that we've got here, around about this 7.550, and through that, and hopefully we can start to retest these lows, 7.450, and then the next one would be 7.150. Okay, so there's a fair bit of downside available to us there, with a reasonably short stop loss as well. We can have a stop loss above the 7.7 area where that swing high was, and hopefully we'll see a nice long leg down. Okay, so that's it for this week. Hopefully you can make some pips, and I'll see you next week. Cheers for now.